up, guys? Today is a very special video. As you can see, we have a new setting. Now that I'm actually recording, there's kind of an echo in this room, and it's kind of weird getting used to recording here. But anyway, I'm in a new setting. This is my office at my new place, guys. Today is Monday, August 12th. I moved in here on August 1st. And I have not recorded in the new spot yet, so I'm very excited and I'm pretty blessed. If you guys remember from I guess every other video I've posted, my last place was like a pretty small studio apartment, and my bed would be behind me recording. It folded out of the wall, so it's good to be here. I have a whole room, a whole office studio, I guess. I've tried to kind of decorate it. We got fancy lights. Right now they're set to blue. I don't know what color is going to be best. I have noticed, this is all kind of random. I feel like I'm catching up with the channel for the first time in a few weeks. I had it set to green because I had noticed that my thumbnails or whatever, if they have primarily green in the thumbnail, that does better. So I guess people like the color green in the finance world, which I guess makes sense. But the green was kind of messing with my eyes, so we went with blue for now. Maybe we'll change it up each video. I don't know. Anyways, if you can't tell, I'm excited to be here. A little more space, a little more laid back neighborhood area, not like college town vibes. Some nature. You guys know my dog Mia. She's been definitely enjoying more of the nature vibe than the city chaotic vibe. And yeah, it's been great to be in the new place, and I'm excited to be back recording. I've got a lot of big plans for the channel. One other quick life update: I did graduate college. I did graduate college after the first 8 weeks of summer. So that's been exciting. I've been working a lot more, and I've been able to save up, a lot more money. I'm excited to start doing some more active, not live trading, but recorded, where's my thought process, where's my head at. And that's kind of what we're going to do today. I want to do a $500 live investment. That was going to be my plan for today. However, it is already past 4 p.m. So technically the market is closed and I will not be able to get filled in real time. But I think we'll just go through what I'm going to do with the $500. We'll kind of plan it out. I'll probably do it on paper. And then I guess I'll make the trades tomorrow morning. And maybe come back and show, how that $500 affected my account. That's the plan for today. I hope that wasn't too much to throw at you guys at once. I don't have work today, so it's been good. I was I'll for sure be able to, get some stuff done and then record this video before the market closes, but it's already 4:15 almost, and I'm okay, we're gonna have to pivot. So let's get into this, guys. So kind of what I'd like to do today is walk through kind of each position in my portfolio, and rather than looking from kind of a fundamental perspective, we're going to be looking at charts, more of a technical perspective, and I'm going to kind of, I guess, speak freely on how I feel with kind of in mind, okay, we're going to invest $500 and see what that does to the account. So right now the estimated annual income in the account over the next 12 months is $2,510. Okay, that's a monthly average of $209.17, and the total portfolio value is $61,454. So what we will do now is kind of walk through each position and kind of make note of a few things. I do want to mention, I'd say one of the benefits about not having too many positions in your account is it allows you to, be very productive and very focused on where you want new capital to go. So if you have 20 positions, 25 plus positions, split pretty equally, when you have some new capital, it's going to be kind of tough to go through each one, stay up to date on your due diligence for all of them. But when you kind of keep your portfolio a little more limited in terms of like the quantity of names, it's a little easier when you do get capital to go ahead and like more quickly identify where you want that capital to go. And I hope we can kind of demonstrate that today, starting from the top of the watch list of open positions, guys. We have Apple, and I was kind of hoping the trades would show up. We should be able to get that to work. Bear with me. I don't know why sometimes it just doesn't want to work that well. Hang on, guys. Okay. Well, maybe the trades will show up in a second, but if you've been following the channel, you know I trimmed my Apple position down 13 shares. That trim was at 215 was the fill. I'm pretty happy with that. I think it was kind of right before this spike and then drop. So, net Apple really hasn't moved or done much since I trimmed those 13 shares. And I will say this, I'm not looking to trim any more of my Apple position. My average price on it right now is $145, and that does put me at a current open profit of $3,603. And again, that is all long-term capital gains. With Apple, and I want to say Apple and Microsoft, because I kind of like to think about these together. I was seeing a lot of stuff like on the internet over the past 2 weeks after Microsoft had its earnings and kind of sold off, I will say. Neither of these sell-offs or momentary pullbacks in Apple and Microsoft were enough for me to really get interested in adding to these positions. So I kind of am happy with those where they're at, and I'm not going to put, any of this $500 tranche towards either of those positions. And that's kind of how I feel about that. I would definitely be more interested in maybe adding to these two at some point if kind of they break down this 200-week moving average. That's that green line. Other than that, I want these positions to kind of stay where they're at share-wise. I know I have trimmed both of them, semi-recently. But again, I'm not looking to sell. I'm not looking to buy. Right now, they're just kind of acting as my tech sector exposure. What are you growling at? She's mad because I put I put her bone on the table, and now she's like, she's mad she can't get it right now, I guess. But after the video, after the video. Okay, anyway, moving right along. Next up, guys, we got Hershey. Okay, I had to take a quick intermission. I logged back in, and I logged out and logged back in, and I still could not get the trades to show up. So that's a little frustrating. Hopefully we'll get that figured out, guys. But like I was saying with Apple and Microsoft, I'm content with where I'm at. And if I do get to the point of kind of adding to the tech sector as a dividend growth investor, again, it's probably going to take kind of a more widespread bear market just because of, how hot I guess the Nasdaq's been over the course of the past, I guess we want to say two years. Over the course of the past 2 years, the Nasdaq's been so hot that it's kind of made me, I guess, take a break from buying tech for a while, because those positions have grown to a respectable chunk of my portfolio, kind of without the addition of any new capital. So, I mean, I guess that's a good problem to have, but let's move on, guys. Like I said, next up we got Hershey, and I probably will be allocating some of the 500 to Hershey. Let's look at what the position looks like right now. The market value of Hershey is $5,960.10, and over the next 12 months, that is estimated to pay me just over $164. That is a quarterly payer, and it is my 5th largest position. But, as much as I've spoken on Hershey, I do really like the fundamentals of this one. I do really like the sustainability of the dividend, and I definitely wouldn't mind or I guess it's not my 5th, it's my 6th. I definitely wouldn't mind moving it to, more of a large position in my portfolio. With that being said, I'm kind of at a point with Hershey where my cost basis on it is 182, and Hershey is at 198 right now. It has had a few closes over 200 recently since I've purchased, and I'm kind of getting the feeling that I might not have too much more time to build this position out, kind of under the $200 mark. So I don't think I'd mind putting the full $500 investment towards my Hershey position, but we will see. So let's definitely write down Hershey as one of the tickers we're going to add with this 500. For sure, a good chunk will be going to the Hershey position, especially if I can get it under that $200 mark. Again, guys, I'm not a wizard, but I do think that Hershey's due for kind of a reversal. We have seen it consolidating for, I'd say, roughly 10 months now. And a lot of times after you see a pullback and then some consolidation for an extended period of time like this, typically that can mean a stock will reverse. And I would hate to get to a point where I was right in building out this position, but I wasn't aggressive enough with my capital, and it's like it leaves you regretting, what could have been, how large the position could have been. I hope that made sense. Moving on. Oh, now the trades are showing up. Well, perfect timing. Anyway, moving on, we have Altria. Obviously, if you guys are fans of the channel, Altria has been a position I've been building out for a long time, long before even really documenting my journey on YouTube at all. And just recently, with this recent appreciation in Altria, right through here, breaking this trend line and this wedge pattern, I am actually, pretty profitable on it. For the longest time on Altria, it was kind of hanging out and consolidating right around my cost basis, which is $44 and change per share on 250 shares. Now Altria seems to have, it's kind of testing if it wants to stay above that $50 kind of round number level. It would be nice if it could continue to trend up, but we will have to wait and see. I'm not going to be adding to it with this $500 tranche. Maybe I will pick up a few more shares of Altria, but that's only going to be if it kind of hits, if it kind of comes back down and retest, I guess, the support in this kind of long-term wedge pattern. So if I do pick up more Altria shares, it'll probably be around kind of the lower 40s, 41 to 44 range. I guess I'll kind of draw something just so we have some sort of reference for Altria. If Altria comes back down, if it comes back down and kind of pauses again in this shaded area before continuing an uptrend, then maybe I'll pick up a few more shares. But, you know, we'll have to wait and see. I'm pretty content with this position, and it is my number 2 holding at $12,577 and change, paying me nearly $1,000 annually. So again, I'm not in a rush for Altria. I'm just kind of letting you guys know where my head's at. And today and tomorrow, I will not be picking up any more shares. I may not be picking up any more shares of Altria for a long time. Like I said, though, if we do get kind of one more retest of this support, then maybe I'll just kind of be like, okay, last purchase of Altria for a while. We'll wait and see. I'll keep you guys updated on the channel. Next up, we already went over Microsoft. Like I said, this little pullback and panic, semi-panic we've seen on the internet since Microsoft's earnings has not really fazed me at all, just because this one, to me, is already trading so extended. I mean, it's been ripping away from its 50-week moving average. It's been way ahead of its 200-week moving average. And like I said with Apple, you know, unless we get kind of a real sort of correction with Microsoft or kind of a widespread bear market, I'm not going to be touching this one for a while. You can see back in 2022 when I added these 10 shares here at 242, you could see I trimmed some at the end of 2021, and then in 2022 we did get that test of the 200 week. And I picked up 10 shares. I could see something similar to that happening, maybe end of this year, mid next year. I could see like a very similar play happening on Microsoft. But until that happens, this one's just sitting in the portfolio. Moving on, guys. Realty income has been a huge pain. A huge pain. And it kind of stemmed from the fact of, we'll actually dig into something here in a sec, but it kind of stemmed from the fact of I built it out too fast and I didn't really have capital or a plan for continuing to build the position out if it did continue to pull back. So, it's left me with a cost basis on it of $65 a share, which isn't that bad. Looking at now, the price is $60 a share. But, I've definitely missed a lot of opportunities. Like you can see, I guess my first tranche of this one was at $67, and it was 125 shares. And then as it pulled back, where I should have been, I should have had that conviction to continue building out that position. I should have had some capital budgeted. I didn't. So then when it was down here in, I guess, the low 40s, mid 50s, I was really just able to nibble. Like you can see one share filled at 50, one share filled at 46, whereas I had, 125 filled up at 67. So not perfect execution on this trade. Looking back, it's definitely a lesson, and I would for sure be in kind of a much better place if I had been a little more patient with building out this position. Guys, this stuff takes time. And we even talked about like the trade-off is with Hershey, if I'm too patient with this one, then I risk kind of not having a large enough position if it does start to appreciate. So again, guys, this is not some perfectly scientific thing. This is not a science. This is an art. Pfizer, moving on. Okay, so I have show trades on Pfizer, and I think I should address this. So this is one I had held like for a long time. Like when I first got into the stock market when I was probably 15 or 16, and I had like used a dividend reinvestment plan back in these years. I pretty much just like talked to my grandpa about stocks and kind of, bought whatever he kind of felt any type of way about. But then I ended up trimming all those shares when I kind of reallocated it, started taking this game much more seriously and taking my own strategy more seriously. So I guess I took off 18.33 shares at 46. That was flattening this whole entire build up here. And then I did start, buying into Pfizer again on my own. And that's these 222 shares. This was not with like the advice of my grandpa. This was not like in high school. This is way more recent. And I do want to address that because it's like the show trades thing really helps kind of tell the story. But with Pfizer, it just really looks confusing. So, you know what? That's okay. So my average price on Pfizer is 33. I have 222 shares. And Pfizer is currently trading at 28. I am down just under $1,200. So, I mean, that's not great. It definitely could be a sign to continue building this one. I do see this one kind of making a rounded bottom, maybe reversal here. And I think I will actually pick up, maybe 3 or 4 shares with the $500 investment of Pfizer. Maybe pick up 3 shares, round this long position off to 225, and then, I don't know, I guess that'll be good, I guess, to get to kind of a pretty number, a multiple of 5. Although the 222 kind of looks good also. All right, this is getting derailed. Let's move on. Starbucks. This is another one that's been tough because as a dividend investor, you take this long-term approach, but when you have a long-term approach logically, you're in this game for the growing stream of cash flow, the growing income stream from dividends. However, that doesn't mean I'm like immune to feeling like I've kind of, bag held a little bit with Starbucks. You can see I have 70 shares of it. I originally built out those 70 shares at the end of 2022, and it was like perfect timing. I was in profit. It was great. I couldn't even continue building the position for over a year. And now it's like I've seen that position pull back and turn to actually like a red position in terms of unrealized profit. But that is okay. With this one, I'm probably going to kind of let it breathe for a little while. I'm not in a rush to add to this position just because we kind of do see like, in my opinion, we do see kind of like a pretty long-term reversal pattern with this head and shoulders. So maybe Starbucks trends down for, 18 months, 24 months and gets like, bargain basement attractive. And in that case, I will really like crank up my due diligence on Starbucks, and I will probably take this one to like a more serious position. But right now, today or tomorrow, I'm not buying this one. Moving on, T Rowe. This one's kind of right at my cost basis. My cost basis on it is 105, and right now it's at 104, so I'm down like $1 a share. on only 12 shares. Again, T Rowe is my smallest position with a market value of only $1,255. Similar to Starbucks, I'm kind of in the headspace right now of letting it breathe, kind of getting a sense for how long it's going to consolidate, and then again doing more due diligence and seeing kind of how far I want to take this one, or if I just want to leave it as a smaller position for right now, guys. So with all that being said, I think I have made up my mind. I'm going to do, I guess we'll do 3 shares of Pfizer. That'll be, roughly a $90 purchase. And that will take us to 225 shares. So we're going to go 3 shares of Pfizer. Again, guys, we have $500 to invest. We're going to go for 3 shares of Pfizer, and, looking at my positions right now and realizing I don't really want to start a new position with 500, we're going to do 3 shares of Pfizer and then 2 shares of Hershey. That's pretty simple and pretty straightforward. The 2 shares of Hershey is going to be roughly $400. The 3 shares of Pfizer is going to be roughly $100. So it'll come out to like $480 or $490. And now that I'm thinking about it, like I said, we would revisit kind of how this affected the income tomorrow or something, but with only 2 stocks, we can probably just do it now, kind of by hand. So like I said, I'm going to be picking up 2 shares of Hershey, and I'll do this first thing in the morning tomorrow. 2 shares of Hershey at $5.48. So that'll bring me to $11 from Hershey, and then I'll be picking up how many shares? 3 shares of Pfizer, and their annual forward payout is $1.68. $1.68 times 3, $5.04, plus what would it be? Like $10.98 or something? Can't remember exactly. $10.98 plus the Pfizer dividend. This will increase my annual income by $16 approximately, and it will cost me, let's see, it will cost me, 198.67 times 2, 397.34 plus, whatever Pfizer is, 28.45 times 3, 85.35. Again, I just want to do like a rough math example because obviously I will not get filled at these exact numbers. So 85.35 for the 3 shares of Pfizer plus 397.34. It will cost me $482.69, guys. And that will buy me, I guess, current annual income of 16 and whatever it was, 1602. So we'll go 1602. I promise this is going to make sense in 1 second. We'll go 1602 divided by 482.69. And I guess my weighted yield for this investment is going to be 3.32%. That'll be like my average dividend yield for this $483 investment. That's not super important to cover, but sometimes it's kind of nice to get an idea of how much bang for your buck you're getting with an investment, I guess. But yeah, guys, thank you for joining me for today's video. It's been good. Definitely was a more laid back one. I've got a lot of exciting stuff planned. What I would like to do is get on kind of a schedule of like, obviously 4 videos a month. I do the Monday videos, but if I could have kind of that first video of the month be more of like, September stock or investing $1,000 in September. And then obviously one of the videos is going to be the portfolio review. You guys really like those. And then, maybe the third video of the month will be kind of a broad topic or teaching moment. And maybe like the last video will be like digging into fundamentals. I got to kind of play with some brainstorming and stuff, but that's kind of where I'm at right now, guys. Thank you for joining me. I'm Cashflow Cart. The growth and support on the channel has been awesome, guys. Please hit that subscribe button if you haven't. Please hit that like button, and I will catch you next Monday at 6 p.m. Let's build wealth.